Hey traders, Raghee here, and in this free recap video, we're going to cover the trade that we took this morning in the room as the market was gearing up for what is probably going to be one of the stranger days and probably a fairly strange week. The market's preparing for what I am endearingly calling the nuclear picnic as the US and North Korea get ready to sit down and talk seriously about nuclear disarmament, which is what the US has already said is basically the minimum requirement to any conversation. I don't believe anyone is expecting this conversation to be solved in one sit down, but nonetheless, Dennis Rodman is there and we'll see how this goes. They're going to meet, I believe, for lunch. They're in Singapore, and it just couldn't be more surreal that this is actually happening. Nonetheless, the market didn't seem to mind until the very last few moments of the trading day. We kind of grinded higher throughout the day. So let's talk about a few things that can help you when the market is anticipating a number of major events. Number one, we're just coming off a fairly expected but G7 disappointment. Then we're coming into this anticipation for this North Korean summit. And then we also have the FOMC on Wednesday. Now, it's not a question of whether or not we're going to see a rate hike. That is already fully discounted. It's baked into the cake. The market is ready for it. What we don't know, the uncertainty surrounds whether or not Jerome Powell is going to communicate to the market whether or not they're ready to start a much more aggressive unwind of their massive balance sheet and what the remainder of hikes look like for the remainder of 2018. I mean, how many more hikes could we see, if at all? What's the trajectory? What's the tone? That is really where the play is going to be, not on the 25 basis point hike. So knowing all that, we knew the market may be trading within the lower end of its price movement range. Now, what does that mean? That means when I take a look at the daily price movement range for today, which is this bar right there, what I realize is there's a much better chance that I'm going to be trading at the low end of it or the average. Now, we actually only traded the lower end of the price movement range, a measly 20 points today in today's session. Well, why? Would the market want to stick its neck out in front of major economic events, major fundamental, geopolitically, potentially firework type of events? Well, the same thing could be said for the Dow. The two trades we took were long the S&P and long the Dow. I'll show you those trades in just a moment. But it's really important to understand what price movement range expectations were. I was thinking if we hit 200, we'd be lucky. And actually, we didn't even hit the upper end of price movement range. We didn't even get up towards the 170 area. I believe we put in a 160 point range. So that gives you an idea of just how narrow price movement ranges were. When you know the market's going to be sort of in that wait and see mode, or what I call tall poppy syndrome. No one wants to stick their neck out, right? Or guillotine syndrome, which should be even better. But the tall poppy syndrome means what? The tallest poppy gets cut first, right? Well, nobody wants to be the tall poppy here. So if I'm going to get into a market, I'm going to get into the market basically long, because that is the path of least resistance still, I believe, in equities. And I'm going to get in long from a pullback. I'm going to get in long where, one, my risk is very muted, and two, I've got more potential upward movement. So that made for a very nice fade buy on the Dow, which moved up nicely to not one but two profit targets. And then we did the same thing on the S&P. We looked for movement to the upside, but in the case of the S&P, it was a pullback or trend following buy, which actually executed twice. Once off the 84 level, and the second time off the 85.5 level. So we had two different entries to the long side. And again, the reason for the pullback buy versus the clearing range buy, and by the way, both worked. Both were fine. So if you're looking for a clearing range buy, that was right through here. And then we look for the movement to the upside. So it took a little while for it to get going, but it did follow through. But instead, we chose on the pullback buys. When you know the market's going to be anxiously awaiting something and the price movement range is going to be a little less than normal, look for the pullback buys. Don't look for momentum. We just may not have the follow through. And then we basically followed through to the targets and then remembered that going into the afternoon and into the Asian session, this market was very likely going to be heading lower because, let's face it, who wants to be long in front of this event? So we knew full well, hey, let's not get long. Let's not be ambitious with any kind of end of day. If anything, we're going to see the sell-off. That's exactly what we saw. When you understand the fundamental narrative, you can, one, understand the potential or lack of potential for price movement, and you get a pretty good idea of what the rhythm of the day is going to be. I'll see you in the next update.